Hello everyone and welcome to my morning report chart analysis videos on Friday 11th of Jan with me, Japan market analyst at Hantec Markets. We've got a relatively risk positive look to the market still. I mean the Fed in the last few days, a handful of Fed speakers, all of them were pretty much coming out on the dovish side, and we had Fed Chair Powell again coming out yesterday and sort of advocating that sort of position. Talked about a number of things, Powell, yesterday. Talked about the high level of debt that he was concerned with. I mean, that's not especially positive in that regard, but also he talked about the balance sheet wind down that's set to continue, and that subsequently what we actually saw was the dollar strengthening on the back of Powell's speech yesterday towards the close. But then we had another Fed speaker, Richard Clarida, who's the Vice Fed Chair, late in the evening, actually talking about once more patience, the fact that the Fed would be patient in its approach to monetary policy, and subsequently we saw the dollar just slipping back again this morning. And that's pretty much evident across the Forex majors today. You've got Euro, which is gaining ground. You've got the Yen, which is once more sort of pulling dollar Yen lower. But also across the Forex, the commodity currencies as well. Canadian dollar, Aussie dollar and Kiwi dollar all performing pretty strongly actually today, and that's again coming through the fact that we had news that there's going to be another meeting between the US and Chinese delegations at the end of this month, seemingly on the Vice Premier of China, Li Hui, and he is expected to be meeting up with senior US officials, Robert Lighthizer and Steve Mnuchin, and that's obviously sort of continuing down the path towards this potential agreement that the US and China could make. So subsequently, risk appetite is fairly positive today, and that can be seen through the fact that UK, German markets, stock markets are all higher, and the dollar is weaker. Subsequently, when you see the positive news about China and the US trade negotiations, the dollar will be the weakening currency, and that is what we're seeing today. So we're seeing that. We're also seeing gains on oil. That oil price rally continues, and again that plays into the risk positive arguments there. Gold is higher on the weaker dollar, as is silver. Just general risk positive but also dollar corrective theme that we've seen recently is sort of coming back into the markets once more. In terms of data points today, we're actually looking out for the US CPI at 1:30. That's the main focus for today, but in front of that you've actually got UK growth numbers at 9:30, expected to come in at 0.1% on the month-on-month growth number, which would pull the year-on-year down to 1.3%, interestingly, but watch out for that at 9:30. But the CPI for the US at 1:30 is going to be the main focus. Expected to see again headline inflation numbers falling away quite sharply, actually 1.9% on the inflation there, and that is expected to just be in line on the core data, we'll watch out for that at 1:30 because that could certainly have an impact on the dollar this afternoon, and that needs to be, as I said, all watched. But my chart today is the FTSE 100. Now, what we've seen in equity markets is a strong move to the upside in recent days, and that's continued on FTSE 100. We've got this little uptrend that actually is building quite nicely over the last week and a half. But look at these momentum indicators. That RSI up over 60. Now that tends to be where the rallies peter out. So this is an incredibly important moment, I think, for FTSE 100. Big crossroads, but it seems to be pushing, continuing higher. Look at those MACD lines accelerating higher. The stochastic strongly configured. The fact that we've broken through that over the resistance band 68.50 to 69.10, I think is also an important breakout. So the fact is that I think that little corrections are a chance to buy on a near-term basis, and holding above that old sort of pivot band, I think maintains an improving chart on FTSE. Breaking out but above that reopens that next reaction high from December at 71.45. And the old key medium to longer term pivot band between 7.2 to 7.3. So that is a big resistance band overhead that looks like the FTSE 100 is sort of developing towards now. So this is an important rally that is continuing. Little corrections are a chance to buy it, but as I said, if the RSI can sort of break decisively through 60, then that is a really strong indication of a near to medium term momentum on FTSE. So you can see here on the hourly chart, you've got a succession of higher lows. You've broken out above 69.38, which becomes supportive, and that key reaction low of 68.60 is, as I said, around that 68.50 pivot area support. So we are still seeing gains in this move, and little corrections are a chance to buy with strong momentum indicators on the hourly as well. So with that in mind, I wish you good luck in your trading, and I will speak to you later.